Hello everyone, my name is Jeffrey Kennedy and welcome back to another Kennedy Tech Chart video library episode. Well, what we're going to be doing in this video and the subsequent videos is I'm going to walk you through one of my favorite technical pages, and this is my %R page. Now, in previous videos, you've seen me do pretty much a kind of similar video series explaining my RSI stochastic page. And the reason in doing that is so that we're both on the same side of the fence. And what I mean by that is whenever I'm looking at a market or looking at a price chart, if I show that RSI stochastic page or if I show you my %R page, you know specifically what I'm looking at or looking for because we've discussed it. Okay, so let's go ahead and get started. Now this video series, I'm going to have 3 videos, and essentially what I'm going to be walking you through initially would be, number one, the different components which make up my %R page. Now there are 3 primary components which make up this page. The first and foremost would be the Donchian average. Those are the blue lines that you see in the top pane. And then next, of course, this is a candlestick format, not an open, high, low, close format. And then here on the bottom, we have 2 additional windows. This tool here is referred to as %R. This is Williams %R. This is an indicator that was developed by Larry Williams. In many ways, it's very similar to stochastic, but the math is a little bit more simple, but it's very much like stochastic. And I use a dual %R approach, which I'll explain. So what we're going to be doing initially today is I'm going to walk you through, again, the primary components. And let me just go ahead and bring that page over here so I can explain, walk you through, again, what the checklist is going to be or what the itinerary is going to be in this video and the subsequent videos. We're first going to explain or spend some time on the Donchian channel. And then the next video, we're going to look at candlesticks. And then I'm going to explain my %R, and then I'm going to show you how I pull all of this together from, say, an analytical or forecasting perspective, and then also, too, as a trading perspective, how I use this page, this technical page, to identify high confident trade setups. Okay, so let's first focus on the Donchian channel. Those would be the blue lines that you see in the top window. So what exactly is a Donchian channel? Well, the Donchian channel was developed by a technician by the name of Richard Donchian. And many technicians refer to him as the father of trend trading. It's a very simplistic approach. I think it's a very valuable tool, and that's why I use this. Now, all this really does is the top line here, the upper line, all this really does is identifies the highest high within 20 periods. So if you're looking at a weekly price chart, that blue line indicates the highest high within 20 weeks. If you're looking at a daily price chart, and this is a 20-period Donchian channel, then you would be looking at the highest high or the lowest low within 20 periods. Now, the Donchian average is simply the midpoint between the upper boundary line and the lower boundary line. That's all it is. Again, it's not simple. I mean, it's a very simple tool. It's not complex at all. And I think that's one of the reasons I really enjoy this tool is because of its simplicity. And when it comes to technical analysis or analysis in general, market forecasting, certainly trading, I like simple tools because simple tools tend to work. The more complex a system is, the more likely at some point it's going to be broken. Okay, so how specifically do I use this tool, the Donchian channel? Okay, well, very simply, I use it kind of as just a quick visual to identify what the trend of a market is. So, for example, here, if the price action on the chart, if we see prices above the Donchian average, again, the Donchian average is the dashed line in the middle, then for me, I look at that and say, okay, hey, we have an upward trending market. Now, conversely, if price action is below the Donchian average, then I look for the trend as down. I interpret the trend as down. Again, I like indicators and oscillators. I like mathematical studies such as this. And the reason why is because it's not open to interpretation. Some styles of analysis, such as, say, for example, Wyckoff, of course, the wave principle, Dow theory, they can be interpretive. Okay, you can actually look at a price chart and look at it from an Elliott wave perspective and come up with 2 or 3 different wave counts. It's interpretive, and the success of the interpretation a lot of times depends on the skill of the analyst. Where if you're actually looking at an indicator or oscillator and you know how to utilize that indicator or oscillator correctly, you're really just looking at a mathematical formula. You're looking at zeros and ones. And, of course, it takes time to kind of become familiar with the tools that you use as an analyst or trader, but the learning curve is much, much shorter than, say, becoming proficient as an Elliottician or a Wyckoфfian. Okay, so going back to the Donchian average. Okay, so number one, I use the Donchian channel again as just a very simple rudimentary tool to identify what the trend of a market is. Okay, now as a trader, and I've explained this before, my style of trading is to identify a trending market, whether it's an uptrending market or a downtrending market, is if I see an uptrending market, I simply like to pull backs in that, in the direction of the larger trend. It's a very simple approach. It's one that's discussed quite extensively in, say, the Market Wizards books by Jack Schwager. So in other words, I really don't spend a lot of time trying to focus on catching the top, quote unquote, the top of a market or the bottom of a market. I merely look for those markets which have very well ingrained trends. And again, in an uptrending market, I buy pullbacks. In a downtrending market, I sell bounces. It's a very simple approach and one that I very much like. Okay, so many of my tools are really designed to do just that. They're designed to aid me in identifying counter trend movement in the direction of the primary trend. So for example, I actually look to the Donchian average to provide or act as resistance in a downtrending market. Conversely, in an uptrending market, I look for the Donchian average to act as support. Okay, so for example, what I like over here to the left of the price chart is notice how prices came down below the Donchian average, and then we pushed right back up to that Donchian average, and then the Donchian average acted as resistance. For me, I interpret that as a selling opportunity. And then we see another example here. We didn't quite get to the Donchian average, but still the trend is down, so I'm looking at that move as a potential counter trend move in the direction of the larger, say, move down. So here was a nice selling opportunity, and here was one as well. And then we see prices back here begin to move back above the Donchian average. Okay, so this is suggestive of a change of trend. And then right here, you can see prices come back, and now the Donchian average is acting as support for that counter trend move, and then prices begin, that's the key word, begin and advance that last for several weeks and actually several months. So you don't have to be an expert Elliottician. You don't even have to be, a CMT. You don't have to be a professional technician. All you need to do to be successful, be a consistently successful trader, is to identify number, of course, manage risk. That's a key component of becoming a consistently successful trader. But identify 3, 4, 5 tools that you like, master those tools, and simply focus on what works best for you. And this is what works best for me, and this is why I'm sharing it with you. Hopefully you'll get some benefit from it. So whenever I pull over this page, whenever we're doing analysis, either for Futures Focus or for Market Academy or for the Big 5 Market Report, I often will introduce one of these technical pages. And since I've done these videos for the video library, you now kind of have a better understanding of exactly what I'm looking at, what I'm looking for, and how I use these tools. Okay, so let's look at some more examples. So again, the Donchian average is a great place to look for reversals in price. So here, this is a JP Morgan price chart. This is a daily price chart. And again, notice the Donchian average. Over here to the left, prices were below the Donchian average. That tells me the trend is down. And then prices begin moving above the Donchian average. And then you can see that they stay consistently above the Donchian average, but there are instances where prices come down to the Donchian average or maybe just a little bit below it. And those are going to be my counter trend price moves. That's where I'm going to be looking for reversals in price. So for example, here, we came back down to the Donchian average. It provided support, and then we saw the reversal. Maybe we pushed a little bit below the Donchian average here and also here, but you can see how prices kind of get tangled up around that Donchian average. Here's a price chart. This is a weekly price chart of Comcast Corporation, ticker symbol is CMCSA. And again, notice the simplicity. I like simple. Simple tends to work, okay? So over here to the left, you can see that the trend is clearly to the downside. Okay, so at that point, every time we see, and I'll get into this in the next video, a bearish reversal candlestick formation, or better yet, prices moving up to the Donchian average and then reversing, those are my selling opportunities in the direction of the larger downtrend. And then here, rather than, coming, let's say January of 2023, rather than thinking that that downtrend is just going to continue and continue and continue, now we have a very simple way of interpreting price action and say, okay, hey, we moved above the Donchian average here back in January, and that would have been February. And then all of a sudden, we begin to see a change in the market. Now that Donchian average is acting as support. So every time we come down to support, this is where I'm going to be looking for my buying opportunities. So again, there's no real mystery. There's no real difficulty here. And, hey, what's the trend of XYZ stock, or what's the trend of ABC futures market? All you have to do is throw on a daily chart or a weekly chart, throw on your Donchian channel. Hey, price is above the Donchian average, trend is up. Price is below the Donchian average, trend is down. Really simple, easy as pie. Okay, now let's look at another market. Now this is kind of interesting too. Don't forget, one of the powerful components or aspects of technical analysis is that once you understand or once you master your core basic techniques, your toolbox. I call it my trader's toolbox. Your whatever approach, whenever you master it. This is what's so phenomenal about technical analysis and why I find it so valuable. I take that same skill set, okay, and apply it across any market and any time frame. So whenever I'm looking, for example, at my %R page, which is in front of you, it doesn't matter what market I'm looking at. We can look at individual stocks. We can do that on the daily basis. We can look at futures markets. We can look at that on the weekly basis. Here is the index. This is the Dow Jones Industrial Average. This is the cash market. And you can see, going back several years now, here we had an uptrending market. How do we know we had an uptrending market? Well, during this period of time, prices were above the Donchian average. And then you can see, well, at the top there, back in '07, you had a bearish engulfing pattern on the quarterly chart level. That's kind of a hello for you. But then we fell below the Donchian average, so we had a period of a downtrending market right here. And then whenever we flipped here, this candlestick pattern, which I'll talk about in the next video, this is a failed bearish engulfing pattern, which is actually bullish. That's the interpretation or the takeaway whenever you see one of those. That's bullish. But then from there, once we actually begin to trade nicely above that Donchian average, notice how we've consistently done that, really going back to, 2010. So since 2010, it's been an easy read here on what's been going on in the overall market. The trend is to the upside. How do we know the trend is to the upside? Because the price action is above the Donchian average. And then for those of you who are familiar with candlestick patterns, know the candlestick pattern here that we saw back in 2020. That is a piercing pattern. That is a bullish reversal pattern. That's also occurring right at the Donchian average, which is where I look for prices to reverse from. Like for example here, and then here, and then here. Okay, it's a very simple tool, very simple technique that works across all time frames and all markets. And notice I'm using it consistently the same way. This is the 30-year bond. This is the weekly price chart. Okay, so you can see back here we saw the candles become forming fully below the Donchian average. And then we started to see strength. but that strength, we got tangled up in the Donchian average. So that Donchian average was acting as resistance. And then we come down and then we bounce, and there we go. This is perfect. This is textbook. Prices advance, they come into the Donchian average, and then at that point you actually see a bearish engulfing pattern. So this is a very high confident selling opportunity in the direction of the trend following a counter trend price move. How do we know it's a counter trend price move? Well, because the price action is below the Donchian average, we went up to the Donchian average, and the Donchian average acted as resistance, as it did here, as it did here, and also again, as it did here. Here's the crude oil market, pretty much the same kind of idea as well. So it really doesn't matter what market you're looking at. That Donchian average, that neighborhood, okay, don't look at it as a precise level, but just look at it as a general zone that whenever prices get into that Donchian average, it's a great area to look. And also, too, for those of you who may be, say, shorter term oriented, maybe, say, day traders or short term traders, like a holding period of, 1 to 3 days or maybe 1 to 3 weeks, you can use the same approach utilizing, the Donchian average on the intraday time frames. This is a 60-minute price chart. Right here, continuation, and you can see here we came right back down to Donchian average, turned up, Donchian average, turned up, Donchian average, turned up. Very simple technique, very simple tool. So moving forward, whenever I pull up this %R page in any of my videos, again, regardless if it's, say, Futures Focus or the Market Academy or the Big 5 Market Report, whenever you see this page and I begin to reference the Donchian channel, you'll know specifically what I'm looking for. If prices are above the Donchian average, the trend is up. If prices are below the Donchian average, the trend is down. And specifically what I'm looking for is, again, my style of trading is to buy pullbacks in uptrending markets and sell bounces in downtrending markets. So when I see something like this, and this specifically, and this is a good segue into the next video, this is a piercing pattern right here, that candlestick, that quarterly candlestick that occurred in June of 2020. It's on the heels of a larger bearish engulfing pattern that had quite a very large lower shadow. Okay, lower shadows are significant because it tells us the market is rejecting lower prices. But this is almost a textbook buy-side trade setup based on just a very basic, very basic interpretation or use of the Donchian channel and the Donchian average and a combination of Japanese candlestick analysis, as was this. This was also a nice one as well. Again, prices move above the Donchian average, we come back down, and then we form this candlestick reversal pattern is known as a 3 inside up bullish reversal formation. Here we have a bullish shadow formation. So again, simple approach, just understanding how to utilize properly a Donchian channel and then becoming familiar with a few candlestick patterns, which we'll discuss in more depth in the next video. You can identify really, some of the three of the best buying opportunities to the buy side in the equity market. Here, this would have been back in 2011. Here, this would have been back in 2016. And then here again, back in 2020. Okay, well, I'll wait until the next video, and then we'll pull up and start discussing specifically Japanese candlestick analysis.